Welcome to Nasdaq Trade Talks. I'm Lyanne Alfaro, supervising producer at Nasdaq with the daily insight on the Nasdaq-100 index, or the NDX. It's made up of the 100 largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and is also one of the best performing indices over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today to touch base on the Nasdaq-100 and performance is Joyce, Managing Director on Nasdaq's Market Intelligence Desk. Welcome, Brian.
Thanks, Lyanne. Thanks for having me.
Yeah,
Appreciate
thanks for being with us. So let's kick it right off and check in on the NDX. Where are we today and right now on this first chart?
Sure. So the NDX today, it's having a strong week. It's up almost 6% today. It's up strong as well. As you can see, the chart is breaking out now to new all-time highs, which it seems to do over and over and over again. The relative strength was in the overbought condition in early to mid-June, and as it worked that off over a couple of weeks, and in late June, it did return to new highs as its peers, the S&P 500, its large cap peers, the Dow Jones Industrials, they have still yet to reach their new highs. So the NDX made new highs in June when other indices weren't, and again today and yesterday, it's making even further new highs. So, and this is coming off a very strong second quarter. So as we know, the market bottomed in late June. For the S&P 500 in the year 2020, this is an interesting factoid, but in 2020, the S&P went down 20% in Q1 and rebounded exactly 20% in Q2. So I thought that was a bit interesting. But in the second quarter, the Nasdaq-100 led all the major indices with rebound of 30%. So just a phenomenal move. Actually, the Russell Microcap was there as well. It also returned 30%. However, the Nasdaq-100 finished the second quarter. It was up 17% year to date, by far the top performing index. The Russell Microcap, which had the same performance in the second quarter as the Nasdaq-100, is actually down 11% year to date. The Russell 2000 is down 13%, and the S&P 500 is still down about 3%. So a lot of strong absolute performance out of the Nasdaq-100, as well as relative performance. And that's the second chart I think we're going to be looking at, if I'm not mistaken.
Yep. So the second chart we're looking at is here relative strength, right? The NDX and the S&P 500. Can you elaborate a little bit more on that, Brian?
Right. So this is a weekly chart. And previously on the show, we've looked at the long-term monthly chart, which showed in the last 2 months that the NDX has broken out to new all-time highs. Its ratio over the S&P 500, the relative strength chart. Here we're looking at a shorter-term time frame, just the last 4 or 5 years. But you could see the move in 2020 has just, I would say you can describe it as kind of parabolic. It's going just straight higher. So not only is it doing well on an absolute basis, it's doing well on a relative basis as well. And there's, good reasons for it. A lot of these companies are technology companies. There's also some, healthcare companies in there as well, and consumer discretionary. Now, a lot of people think consumer discretionary. Many of those types of companies would be negatively impacted by the economic lockdown, and they are. But the weighting of the index has, 1 or 2 companies, I believe, making up 30% or so of the index, and one of those is Amazon, which many are arguing is benefiting from the lockdown as more and more consumers go online to do their shopping.
And I mean, this performance looks great, right? Both of the daily NDX and looking at the long term. But as great as this performance is, we're still looking at some potential risks as we take a look at COVID-19 cases and having some states starting reopening. What is this looking like?
Yeah, exactly. So here we have a chart of the number of cases diagnosed with COVID-19. As you can see, in the last 5 or 6 days of June, the number of cases on a day-to-day basis was, making new highs, and that certainly accelerated yesterday, the first day of July. So we'll remain to be seen, how this data translates into other metrics that are being tracked, such as the daily death rates. What's the reason for the recent spike in cases? Does it have to do with the social unrest and a lot of the protesting going on? Does it have to do with the reopening and consumers getting out there in restaurants and shopping? I think time will tell. So that has created some uncertainty, but the market does seem to be, for now, holding this off. There are certainly other risks out there as well. A lot of that on the geopolitical front with, say, for example, China and Hong Kong. We could see an impact to trade regarding the stronger rules that China has implemented on the citizens of Hong Kong. So that remains to be seen. And then the issue of tariffs, which was a big topic in 2019. Last month, the administration speculated that they could potentially place up to $3.1 billion in tariffs on imports coming from select countries out of the European Union. And last month, while the administration did say that it expects China to honor its Phase 1 agreement that was reached last year in 2019, given the concerns going on now with Hong Kong, you wonder if there is some risk to that agreement. So again, a lot of uncertainty out there. Looking at the price action is certainly very bullish. But another thing to keep in mind is, we are now approaching, those seasonal weeks, summer months, which really kick in August and September. So we'll have to wait and see how that plays out. If there are seasonal factors that come into play, as well as the Fed's balance sheet, which over the last few weeks has flatlined and even come in a little bit, which kind of coincides with when the S&P and the Dow made their recent highs back in early June. So, I certainly don't expect the Fed to continue to reduce its balance sheet, but it'll be interesting to see, the path of the balance sheet going forward. Do they continue to increase the assets on their balance sheet, or will they keep it flat here for some time? If so, how will that impact the market? So there's certainly a lot of cross currents to keep in mind. We've had a phenomenal move off the lows. The Nasdaq-100 is up over 50% off its March lows. So just a phenomenal, incredible move. We had a record sell-off from the February highs to only then be followed by a record move higher. In Q2, the rebound for the S&P 500 was the best since December 2000. Since December 1998. So more than 30 years ago. And for the Nasdaq-100, it had its best quarterly performance since, I believe, December 2001. So a lot of bullish price action, but that's in the rearview mirror of what to expect going forward. There's certainly some risks out there. And as we approach the seasonally weak summer months, it'd be interesting to see, how the markets can hold up in that environment.
Absolutely. Something to keep an eye on in the weeks moving forward. Brian, thanks so much for your insight, and have a great 4th of July weekend.
Okay. Thanks for having me on, Lyanne. Appreciate it.
Nasdaq followers, for more coverage, please stay tuned to Trade Talks. We'll be coming back to you next week.